Good morning, ladies and gentlemen. Good morning. Day two on our journey to $1 million. We spent the first 45 days or so trying to um, just put everything in place and see what we could do better, how we could do better, talking to some people offline, getting feedback. Uh, but we started officially yesterday, journey to $1 million. And yesterday, uh, we traded. If you were on, you saw Keith make 9.75 points, and you saw me make 13 and a half points, which equates to essentially 22 and a half points, 22 and a quarter point, 23 and a quarter points, excuse me. Uh, uh, and I'll show you, this is our tracker. You have to have a goal, right? So give it a second to pop up here. Uh, Guys, I'm verifying that you can see the millionaire plan. This hasn't populated yet, but can you see it now?
Yes.
All right. So yesterday, Keith and I traded for we're doing something a little different, but we traded and made 447. If you guys were online yesterday, you saw that. All right. So we'll see what we get done today. Uh, Same process, different day. So now, here's my question though. How many of you guys, and I'm not asking y'all, this is rhetorical for YouTube land, but this is a question you have to ask yourself, ladies and gentlemen. Why are you trading? Why do you want to be a trader and investor? If it's for the money, because you like to make money or you want to have money, okay. I don't necessarily know how to say this except to say there are people who like football. Super Bowl's coming up, right? AFC and NFC championships coming up, right? Just because you like football doesn't mean you're gonna get out there and try to play it. This is not something that you do for fun. This is not something you do for the carrot at the end of the stick. This is something you do because you have a passion for it. And you want to be able to develop and hone, maintain, perfect, strive for perfection, a skill set. If you're not doing it for that reason, this thing will fade on you when things are not going the way you want it to. If you're not doing it for the right reasons, the moment that you make a lot of money, you're going to not do what you're supposed to do, which is compound. Uh, if you're not doing it for the right reasons, you're going to be emotionally all over the place. If you're doing it and you're broke, you have to develop an ironclad will to be successful. I ain't telling you what the real is. I'm not giving you pomp and circumstance and, ooh, look how great this is. I had a conversation again with someone on yesterday, and they sent me an email and said, please call me. I need some help. And in that conversation, I found out that the only reason they want to do it is for the money. And I explained to them what the process was going to be like in order to be successful. And they told me they didn't have neither the will nor the time. They just wanted the results. And I'll tell you exactly what I told them. No work, no reward. Now, I'm not saying you can't give somebody $50,000 and let them trade it and then you make a bunch of money from what somebody else does. Okay, cool. But if you think you're just going to come in here on Monday through Friday at 9:30 and think it's just going to fall in your lap, don't work like that. You're not going to get in here at 9:30, trade from 9:30 to 2, 9:30 to 11, 9:30 to 10:30. I don't care what it is. And think you're just going to be a stud muffin or a trader. People who do this make billions of dollars a day. I mean, a year, excuse me. Uh, this is not a game. And they do it I know people who literally go hunting for little money to show them they don't deserve to be here. So with that being said, right, we're gonna go ahead and get to it. Right now, what we do, I don't see anything happening right now. I just want to put that out there. What's your actual reason for trading? So I'm gonna tell you mine. My reason for trading is because I love the challenge. I get up just chomping at the bit because every day is a challenge to see who's going to win. I've been doing this for over 25, 30 years. And I'm telling you, I get a high from trading every single day. And in addition to that, it also provides an avenue for me to provide sustainable generational wealth for my family. That's my reason why. So anyway, with that said, let's get in and get started. Ronald Jones, before we get started with what the charts look like, what does our news look like today?
All right. It looks like today we only have 10 a.m. news. We have an orange folder, Richmond Manufacturing Index.
Okay, cool. Only an orange folder. Let's go to this quarterly chart and go all the way down and get to our, as I told y'all, bearish outside bar, bullish outside bar, excuse me, and higher high, higher low on a quarterly. My full expectation is for price to break the all-time highs. It did it on the other markets, but that should tell you something. I'm going to get into that here in just a bit because I'm going to teach you something here. But it hasn't broke the highs from the NASDAQ, right? I think it will, but it hasn't yet. Same thing here. You still have the ABC pattern out there, a downtrend. Doesn't break the highs. We headed back down. But I, again, fully expect to break the highs. I've been talking about this support area that it bounced up off of for the last however many weeks. It came down, broke down through the support area, and then broke down, came down through it a little bit, then took off to the upside. Right, that's the date, that's the weekly. And on our daily, she's at the literally top of our resistance zone. That's why you're having some pushback right here because there's a lot of resistance right here. Okay, so before we get into our intraday charts, all right, let me talk to you about something. As technology goes, so goes the world. That's why I follow the NASDAQ heavily. Because as technology goes, so goes the world. Technology leads. And if technology is not leading, we're not going anywhere. If I'm not mistaken, the Dow made all-time highs, or the S&P made all-time highs. I don't really pay attention to those markets, but I think they made all-time highs last week. I'm not saying it's a bad sign. I'm just saying the wrong thing's leading. Because the NASDAQ needs to lead. The NASDAQ needs to lead. And that's where we are. So we'll just kind of have to wait and see how everything kind of unfolds here. I think it's going to go up. I just think that it's interesting that the NASDAQ is the laggard in this situation. Just pay attention to that. All right. Now, with that said, let's get to our intraday charts. Basically, our longest time frame has made a high and a lower low, and it's trading dead smack in the middle. There's literally nothing to do. I wouldn't be trading any of this. It's dangerous. So we wait. Fellas, y'all got anything?
You know, I did a screenshot last night, and I guess I forgot to hit the send button last night because I just saw it sitting in my inbox. But
All right.
I actually took a picture of that that I believe it was the 900 chart, and I made myself a note. This is crazy, and it is basically showing what we see right now. Yeah, it was on the 8100 volume, how sideways it was, and this was still at 8 o'clock last night. So if
Yeah.
you look at that screenshot I sent, you'll see where, and this was at 8 o'clock last night, still just sideways. But I'm sure, it's going to break out soon. So we just wait.
Yeah, so this right here, this is what I call cranberries. Cranberries look absolutely atrocious to me. And they taste even nastier to me, right? This right here looks nasty. And I promise you, if you try to trade it, it might taste nasty to you. You might leave a real bad taste in your mouth. So, you know, me personally, I'm wouldn't dare say to anybody in a public forum again. I'm not here to give you any advice anyway. I'm not a financial advisor. I'm not registered with any agencies. I'm not here to try to tell you how to manage your portfolio. He's showing you what we're doing. If you want to do what we're doing, that's on you. If you don't want to do what we're doing, that's on you. If you want to know more about what we're doing, you can send us an email at support@theprofitstalker.com. You like what we're doing, you can subscribe, you can share. If you don't like what we're doing, shoot me an email, right? I'm here. This is what I do. I've been doing this longer than a lot of people that's doing this now have been alive. So this is just part of who I am as a person at this point. So I mean, that's what we are. And Quentin is absolutely right. This thing is literally, I mean, it's been what you want to do with that? And this is equivalent to about a 5-minute time frame, 3-minute time frame. And let me show you what I'm talking about. I don't trade time charts. I know it's real popular in the trading space, in the trading world, but I don't trade time charts unless we're talking about, and that looks very different. I'm sorry. Did I do something wrong here?
That's on a 5-minute chart.
I figured the 5-minute would look very similar, but it doesn't. And this is why. But so this 5 minute says this thing should come down. Now this is the thing, and I just put this up here as a thinking it was going to look very similar to the 8100. Boy, was I wrong. 17,409, 17,460, and then this one here has a high of 488. I'm gonna let y'all know now, right? This 5 minute looks very depressing. I honestly think that we have to watch this now to see, but it does look, I'm sorry, it does look like the 8100. And I'm gonna show it to you. I'm gonna show you in just a second. If it gets below 6450, it's over with. I'm telling you that now. So, and let me go back to my 8100. The 8100 just is based on volume, not time. And you see, it did give you, it's the same look. It's just based on volume and not time. So there you go. So this thing breaks below 6450. She just did. It might be a wrap here. But it's still flat on my 8100 chart. Quentin, now I want you to play the how to read the stock charts videos today, and we're going to loop it because this is the thing. We want to teach people the very basics, and we want them to know what the basics are. And then we'll play that, and then tomorrow we might play the scaling method because I'm going to do another video hopefully today on the scaling method and get it over with. And then we'll start a new series on next week. I didn't do a video last week, so that means I'm going to do 2 videos this week.
Okay.
But anyway, so if you could do that, I'd greatly appreciate it.
Okay.
We have before you do that, we have a situation, and it's a very interesting one. It's a very interesting one. Meaning that if we get a pullback on this 900 and price closes, ooh, this is interesting.
Probably got a short coming up.
Potentially, but it's only potential, and it is, again, is in that range. So for me, it's just no other way to put it. Is interesting. That's tough. Wow. It was a 1 bar pullback, but it gave you that red bar close right here. But you see how the thing is herky jerky? Y'all can have that. When you can play the book. I'm not playing with this. That thing, you got that thing snatching. Y'all can have it. I'm gonna go on mute here. I'm here, but no trades right now.
Hold on. I was gonna ask you a question.
What's up?
What was that your initial reason for trading? And if it wasn't, then what was that?
Talk about when you say what my initial reason for trading, you talking about when I was talking about earlier to the group, to YouTube?
Yeah. I'm asking, like, when you first started, was that your reasoning behind wanting to do it?
Man, that's a long story. I'm gonna give you the abbreviated version. When I was in high school, I was a big time athlete, right? So I took junior achievement. My coaches made me take get in a program called Junior Achievement, which was basically keep us out of trouble, right? Keep tab on everybody. And a guy from the stock market, used to work for a big firm, came and taught us about the stock market. And where I'm from, the people that made all the money didn't do it legally. So so when he showed me that people made more money legally than the people that I knew of illegally, and it was a legal way to do it, it completely changed my thought process. And then when I went to college, and it just happened that everything was kind of God ordained, because I went to college and one of my professors was a big time investor and stock investor and trader and all that kind of stuff. And me being an athlete or coming from an athletic background, I just always saw things as competitive, right? And this was a place where it left the playing field was level, because it was based on some of what you knew, but more about the nerves of steel, right? And what kind of nerves you actually had. The challenging piece was always there for me. And then, but when I saw that you could make, when I say, when I'm saying God amounts of money, uh, and completely changing, it wasn't based on your education, what kind of degrees you had, what kind of school you went from, what kind of family you was from. None of that. It had something to do 100% with you individually as a person. What kind of person are
Yeah.
you? What kind of grit did you have? It was based 100% on you. That was my thing. I'm a different breed of cat, right? I'm not saying I'm better or worse than anybody, but I'm a different breed from the standpoint of, hell, this truth of the matter is y'all know me. I mean, Key know me, Quentin know me, and you know me. Uh, I'm just a little different in that regard. By me being different, I think this suited my personality so well, right? Um, this is the only place I know where this is 100% based on you and your abilities internally. Ain't got nothing to do with how fast you are, how strong you are, what kind of family you come from, how much money you have or don't have. It ain't got nothing to do with none of that. It's got 100% to do with who you are as a person internally. That's it. And the only person you can blame or not blame, for that matter, who you are internally, is yourself. So this right here, you know, this is for me, this is a game, and everybody has equal opportunity. The question is, will you take advantage of the opportunity? Most people find out that their bark is much bigger than their bite when it comes to this business. Everybody's tough, smart, got degrees on the wall, 5'11", 220 pounds, a bunch of muscles, real fast, come from a family with billions of dollars or millions of dollars, got all kinds of advantages in the world. But this right here don't care nothing about none of that. Zero. This cares zero about any of that. What you gonna do when you face with this situation? Because it's mano a mano, partner. It ain't got nothing to do with nobody but you. You fighting yourself and forcing yourself to be who you are as a person and who you think you want to be as a person. Because I say this to everybody on this call. Everybody want to be a millionaire. Everybody want to be rich. Everybody want to drive Mercedes Benzes, Bugattis, Lamborghinis, Bentleys, live in the high rise condos overlooking the city, being able to travel to Dubai, having beautiful women on your side, or having a great looking man by your side until it takes what it does for those kind of people to be who they are. Most people talk that talk. Most people don't walk that walk. Everybody in here, y'all three know this. I had a situation. I woke up, had identity theft in my account over all my accounts overdrawn $1 million. What you gonna do, partner? That's real life. That's not something me making it up to make me sound like I'm some kind of good. That's real. And I think my wife fell more in love with me because she saw that I literally didn't flinch. I literally said this to her, and you can call her right now. All of y'all got access to a phone number. Y'all call her right now. I said, and I quote, well, we just got to figure out a way out of it. And she said, you talk like our account overthrown 35, 100, $200. It doesn't matter the amount. It's a process. It's a process. I don't stress about something I can't worry about. I do what I got to do to handle what I got to handle, and that is the bottom line. That's how I roll. I'm not that guy that's a pomp and circumstance guy. I am not that guy that, watch this. Keith will tell you this. I don't quit on nobody. If you quit, you quit. Once I'm in, I'm in. Things be looking bad, things be looking great. I'm here. The question is, are you? It's easy to cool and be with anybody or any situation when you own the yacht, you drinking literally 200-year-old cognac that costs $25,000 a glass. Not a bottle, a glass. When you go to the bathroom, it's gone. So you literally pissing out $25,000. It's easy to be when you ain't worried about nothing like that. It's easy to handle and be around people when everything about you is going great. What you gonna be when the storm hit? I don't care nothing about none of that. I care about what you're gonna do when the storm hit. Because no matter who you are, no matter where you are, no matter your color, no matter your size, no matter your family, every single person on the face of this planet will go through a storm. I'm just telling you that for fact. Now, your storm may be different than everybody else's storm, but a storm nonetheless. So I hope I answered your question. I said I can give you the short version, but that right there is you talking about pushing the button, boy. You just
I know. Hey, gotta dive deep sometimes.
You talk about poking the bear. Yeah, I'm telling you, man. I mean, again, I told y'all this before it happened. You don't want to trade this. And this is why I say the things that I say. I'm not perfect. I just have a little bit of knowledge about this because I've been doing it for a long time. That's it. So, any other question? Did I answer your question? That's next thing. Did I answer your question?
Oh yeah.
All right, cool. Any more questions?
Give me a thumbs up if you can hear this, because I'm playing it from my computer. Give me a thumbs up if y'all can hear it.
I can hear you.
No, I'm talking about the video.
Got it. Here we go.
Wow.
You ready? All right, here we go. I can hear it.
Is it clear?
Yeah, it's clear. Please.
All right, I'll pause it till you say you're ready to roll.
Oh, we're ready to roll, man, because I'm not fooling with this. I'm going to go do something else. I'll be back in a few minutes. I'll put it on mute and you go ahead and start playing it.
All right.
All right. All right, Carmen. Welcome. We're going to go over the basics of what the stock market does. Today, we're only going to cover a few things. We're going to cover the 7 things the market can do. And we're going to cover the 2 reasons to take a trade. Okay. So we're going to go over the 7 things the market can do. And we're going to go over the 2 reasons to take a trade. And then we may get into some more stuff just depending on what time frame we have. So what I'll do is I'm going to type up here in the box. And then I'll say today's session.
Is this something that I should actively take like physical notes on, or?
You can, but it's going to be I'm going to let you know right now, everything's going to be on the screen. So you can take notes at your leisure And you can kind of take notes as I'm giving it to you as well, because you'll see me type it in here. 7 things the market can do. Uh, 7 things. Four reasons to take a trip. And this literally is part 1. There's 3 parts to uh there are 3 parts to the lesson. And this is part 1.
Okay.
And we're going to go rather slowly during the training sessions, and then we'll do another training session. And then we'll do another training session that'll be all of the introductory training sessions that you'll need. But this is part 1, and you'll see it. I'm gonna put it up here in the corner, and you'll see today's session. We're going to talk about the 7 things the market can do, and 2 of the 4 reasons to take a trade. Okay. All right. So 1, the market can make a higher high. Right. That's 1. And I'm gonna show it to you on the chart too. Okay. So that's 1. The market can make a higher high. 2, the market can make a higher low. 3, the market can make a lower low. 4, the market can make a lower high. 5, the market can make a double top. 6, the market can make a double bottom. 7, it can make a reversal. Okay. Those are the 7 things the market can do. So I'll go over them again, and then we'll get into the interactive part of the training. The market can make a higher high, a higher low, a lower low, a lower high, a double top, a double bottom, a reversal. And as a bonus, today, I'm going to talk about swing high highs. Excuse me. Swing highs. And I'm going to talk about swing lows. Okay. So we'll talk about swing highs and swing lows as well. So let's go over this portion first, where you can see it. All right. So I'm going to go over all of that right now. We're going to make the screen a little bigger so that you can see exactly what I'm talking about. 1 second.
Well, you might be able to get something number 900. You had an ABC pattern on 8100 that triggered to go down. So that might, it's in a range, and I understand that, but just considering the fact that it's the ABC on the 21, on the 8100, would that make you curious? Would that make you interested in trying to take one short?
I see what you're saying there, Chief. When as I look across the charts, they are all lined up. My question to you is, how many? It's triggering quick now. How many? What would be the stop for something like that? Seeing that it's still in consolidation.
It'd be 1-1, or don't play with it. You generally want to hold a trade 1-1, whatever it would have been.
It's too late now. It looks like it's already triggered.
Well, it didn't. It wasn't our trade because you only got you didn't get a market structure on the 900.
Oh, okay. Yeah, I see what you're saying. I was looking at the 300 chart and the entry,
Oh, yeah.
but I see what you're saying now. Yeah,
You know what? I wasn't looking at the 300. I was looking at it on the 900. I need to get back to the 300. Forgot about that. Yeah. So you had the one bar. You still want to. You had the one bar pull, but yeah,
If we're going on the poke bar, yeah,
yeah.
that thing has dropped. Oh, but look at that. Move kind of quick there. Did you take it on your end?
No, no. What I'm doing hasn't triggered yet.
Okay. All right, I'll restart the video.
Let's say obviously. Obviously, sure that you can see it. All right, so let's talk about the higher high first, right?
Mm-hmm.
So if you look at, you pick any spot on here, but we're going to pick this one. We're going to pick, I'm going to make this, excuse me while I make this just a little, because I need to move this drawing so we can make sure we see everything. There we go. The draw. All right. So higher high. You see this bar right here, and I'm going to highlight it, right? This bar right here.
Mm-hmm. The green bar?
The green bar, right? You see this green bar, right? You see this bar right here has see the high of this green bar before it, right?
Mm-hmm.
This green bar here is higher than that, right?
Right.
So that's what you call a higher high.
Okay.
Okay, so that's a high high. It's simple stuff, but trust me, when you simplify it,
Mm-hmm.
it makes it easier to understand when it comes to reading the markets.
Right.
Okay. So you have this higher high here.
Mm-hmm.
That bar is higher than that high, right? Now, this also has a higher low because you see the low point on this bar previous to it has that low point. You see that?
Mm-hmm.
So now this bar here that's highlighted in green
Mm-hmm.
has a higher high and a higher low than the bar preceding it.
Mm-hmm.
Right? So that's one phenomenon that it can do, a higher high and a higher low than the bar that's preceding it. Okay, so this bar here has a higher high and a higher low than this one. Now let's talk about the lower lows and the lower highs. You see this bar here, let's go to this red bar. You see this red bar here that I'm going to highlight it so that you can see it. You see that bar there?
Mm-hmm.
It has a lower low than this bar. Let me not do that. Let me this way. It has a lower low, right? But this bar is low as here. This bar is low as here, right? So this bar here also has a lower high because it didn't get any higher. So it has a lower low and a lower high than the bar that preceded. See that? Does that make sense?
Mm-hmm.
Is that easy to see?
Yes. Mm-hmm.
Okay. All right, cool. And I know this may seem a little elementary, but trust me, it gets very complicated very quickly.
Right.
So let's go and find, so we're going over the lower low and the lower high, right?
Mm-hmm.
So now let's see if we can find a double top and a double bottom. And let me see if I find one. Because those are harder to find, to be honest with you. But let's see what we can come up with. Ladies and gentlemen, or gents, let me go ahead and put this out there. You see how this thing is in this range and it moved hard to the downside. I heard Keith and Quentin discussing the trade, and it was. I mean, was it a one bar pullback that gave you an entry? Absolutely. I just told y'all I wouldn't. For me, I don't want to call a trade live because now we're on. You know, this is live for trying to get to that $1 million. So this trade worked, and it worked well. So I'm not taking anything away from it at all. And under normal circumstances, we can be like, okay, cool, let's take that trade. And if you're trading individually, you might be able to take that trade. Me calling that trade, though, in the event that that thing gets stuck literally right there in the middle, you ain't gonna have time to get out of it without taking a loss. Because Quentin said it, I think I heard him say, because I wasn't sitting right here, I think heard him say it was moving kind of fast. So if I tell you to enter this trade, on the arrow, this looks good after the fact. And it does. It went well. And then it came down here and gave you that by the time you got the market structure pullback, it was no longer valid. And this trade right here would have hurt your feelings. But we all know we don't take, once that thing is moved so much, we don't take the second and third and fourth entry. Because if it's not really going to give us the market structure pullback, then we just don't worry about it. But yeah, that's it. I mean, y'all were spot on as far as saying that there might be a trade right there. I just didn't want to call it because we're in this range and it's tight. And when I say it's tight, again, let me show you what it looked like when you spread the charts out. Can y'all hear me?
Yeah.
Yeah.
I'm just trying to give you the real, right? And this is not what you want to be trading, in my opinion, because it's so tight just yet. Because watch this, you got a 2B with a retest to go down, and you got a confirmed 2B retest to go down, and you got a confirmed 2B retest to go back up. So, Bulls and Bears fighting. I'm just sitting on the sideline watching the show. You can start it back up, Keith.
Okie dokie. Ladies and gentlemen, what we're listening to right now is How to Read the Stock Market Part 2. We also have Part 2 and Part 3 queued up as well. If you want to ask a question, send emails to support@theprofitstalker.com.
One, I don't see one yet. Hold on. I think we may have something. So let's go here. And let's go here. Perfect. Okay, so I'm going to draw a line. See this red bar here?
Mm-hmm.
And you go all the way across. See that red bar there? See,
Mhm.
so I'm going to highlight these two red bars for you to see analysis. And let me go to my rectangle. This bar here has a high. See that?
Mhm.
And this bar here, actually, there's a couple of them, but we'll highlight the one that I was talking about. That bar there has a high, right?
Mhm.
But then that same high. That's called a double top
Okay, you're talking about the two red.
bars, right? The bar there
Uh-huh.
and the bar right there. The two
Right.
red bars. So you're going to, that's a double, these are double tops. Okay. So that's when you're talking about double tops, you're talking about two bars that are different to have the exact same height.
Mm.
Okay. So that's what you call a double top. A double top is nothing. You can say double, you can say two top, or you can say, but it's a double top and they have the exact same height. Now, let's see if we can find a double bottom. That was, yeah, it took some doing to find that. So let me find a double bottom here. Well, I think it might be one right there. If I'm not mistaken, I could be off. So let's see. Oh, it's perfect. So there you have a double bottom. So you have right here on that green bar,
Mhm.
and here on this green bar.
Mhm.
I'll tell you what, let me do it like that, and then let me move it. Let me move it there. And move it here. Right?
Mhm.
So that is what you call a double bottom.
Okay.
The first one we looked at was a double top here.
Mhm.
This one here is a double bottom. And they have the same bottoms. I mean, this, the price came down and hit the same point twice.
Mm.
So I'm gonna ask a question, and you're not supposed to know the answer to this, but I'm just gonna see if you notice. Do you notice what happens at the double bottom and what happened at the double top? To price? Do you notice what happened to price at those 2 points?
No, I did not notice.
Okay, that's fine. They sometimes reverse. See how they hit that high, and
Mhm.
then it receded off of that high
Mm.
to the downside,
Mhm.
right?
Mhm.
And then this one here hit the one, hit the low, went up, came back down, hit this low, then she took off to the upside.
Mm.
It doesn't happen like that all the time, but a lot of times that's what happens in double bottoms and double tops. Okay. All right. So then the next thing we're going to talk about are the reversals. I'm going to get back to my station here, and I'm going to talk about there are 4 kinds of reversals. Okay. And I'm going to type them in here so that you can see them. And you can take notes as necessary. So let's see here. Type text. And then you have your 4 kinds of reversals, or as I revealed, make sure I can spell right. Okay, good. You have 1 ABC pattern.
Okay.
You have 2 1, 2, 3 pattern. You have 3 the 2B pattern. And you have 4 the 3. That's it. Hashtag reversal. I need to fix that. Okay, so then you have these here. You have the 3-bar reversal. You have the ABC pattern, the 1, 2, 3 pattern. And let me move this so we can see it here. All right, so these are the kinds of reversals, and I'll give you a second to write that down. You have the ABC pattern, the 1, 2, 3 pattern, the 2B pattern, and the 3-bar reversal pattern. And we'll go over those patterns, and when you let me know that you have that written down and ready to go.
Oh, I'm ready. It's ready.
Okay, cool. So I'm going to move all over this chart because I have to find what we call the ABC pattern. So I have to get back to my time. Chart there across there. Okay, good. And then there, and then we're at November 2023. So, okay, cool. All right, there we go. November 2023. So what I'm going to do is look for an ABC pattern. And then I know there's one in here. Okay, cool. That's good. That's good. That's good. Okay, so an ABC pattern happens after an uptrend, and it's not cool. So hold on, take that back. That is not a good one. I want to shoot it. I want to show you as good a one as I possibly can, and I think we have a winner. We do. I think we have a winner. We do. So the reason why I kept scrolling is because I wanted you to see exactly what one looked like. So I'm gonna ask a question, and I don't want you to overthink it because it's a really simple answer. So it's probably going to be the simplest thing that you're going to come up with. Uh, what kind of trend would you say this is?
Um,
Up or down trend? Let me ask you that.
oh, up.
It's an uptrend, right? It's because the market just continually moving up, right? So an ABC reversal gives you what we call, and I'll type in the box so you can see it. That's not do. Type text. Okay, so you have what we call an A, a B, B, and a C. So the ABC pattern, right,
Mhm.
has a higher low
Mhm.
followed by a lower high, followed, and this is an uptrend. So an ABC pattern uptrend has a higher low, lower high, and a higher low. Okay. And then what typically happens is the trend then resumes in its original direction and goes up.
So I'm sorry, did you say that again? For the ABC pattern, it had the lower high.
Okay, so it starts with a higher low. So I'm gonna type it out, right? So I'll type it out. Type it out here. It has a higher low,
Okay.
move it so you can see exactly what it's supposed to be. It has a lower high, and then it has a lower low. An ABC pattern has a higher low, lower high, and then a lower low. Okay. So, and then after that, it then starts to resume in the direction it was originally going. Okay.
Mhm.
So that is what the ABC pattern does. And then we'll get to the 2B pattern, right? Because the 2B pattern happens off of the ABC pattern, or can happen off of the ABC pattern. So we have here, and the ABC pattern compares this higher low right here
Mhm.
and this lower low right here.
Mm.
Okay, so it compares those 2 points, and it becomes an ABC pattern once it breaks above the high of the bar here that broke the bar low here. So I'm going to repeat that again. The 2B pattern is complete when price breaks the high of the bar that broke the low. So this bar here broke the low of this bar here. So when price then comes back and breaks above this high, that I'm sorry, that 2B pattern is then complete. And now prices should resume to the upside. And I'm going to show it to you in the opposite direction. There you go. And then what we have here is okay. So now we're going to look for an ABC pattern to go down. I want to see if I can find one. Just give me 1 second here.
Mhm.
Need to find one going down. And there we have it, right? I don't know what just happened. So let me see. Oh, I see what happened. I got mine. Oh, there we go. So we have a downtrend
Mhm.
here, right?
Mhm.
And then now we have again our ABC pattern, right?
Mhm.
So that would be, and I'll show you this too here. You have your, let me get this type text. So then you have your A, B, and C pattern there, right? So you see now the ABC pattern going down has a lower high, higher low, higher high. I'm gonna write it down so you can see it, right? So it'll have a lower high, there so you can see it. It'll have a higher low, and then it'll have a higher high. All right. So in this case, right,
Mhm.
the 2B pattern is very simple because all you're going to do is look for that high point
Mhm.
of that lower high. And then this is the bar that broke that high, right?
Mhm.
The 2B point is a breakdown below the low of the bar that broke the high.
Okay.
And let me move this here so you can see it. So that's the low of the bar that broke the high. And then once it does that, the downtrend, I have it drawn with the arrow, but I should have drawn it. I mean, with the line. Let me draw the arrow here. The downtrend at that point should resume, right? Should just continue down like such, right? Once it breaks this low. So this is the high. This is the bar that broke the high. Once price then comes and breaks it down below that point, then we're looking for the trend to resume to the downside. Okay. So those four. I'm sorry, that's two of the four reversals. We talked about the ABC pattern. We talked about the 2B pattern, both in an uptrend and a downtrend. Now, let's talk about the 3-bar reversal next. All right. The 3-bar reversal, we'll go to a different area on the chart so we don't. You do have that, right?
Mm-hmm.
You have that part. Okay, cool. So then the 3-bar reversal is, let me find a good one that I can show you that's easy to see. That's perfect. Okay. So a 3-bar reversal takes into account 3 bars. And we'll both look at a long and a short. Okay. And what happens is I'm going to separate these charts out some so that you can see them. And you can see, we're going to count them here. The 3-bar reversal counts for, and I'm looking for my tool to type my text. Okay. So we have 1 bar. We have 2 bars. And then we have 3 bars. Okay. The 1, 2, 3 reversal is when price when bar 3 gets above bar 1. And that is basically a 1, 2, 3 reversal. When you have 3 bars as such, and then you have the 3rd bar to get above the 1st bar's high. Okay. Does that make sense? Okay, cool. So on to the next one. Now we'll look for a 3-bar reversal down. I think I see one. Let me make sure that there. That's really tough. That's really tough. Let me move on to the downside now. And that's not going to work. Okay, so let's just keep looking. Yeah, these are a lot of. Okay, come on. Now I know you. There we go. Okay. So a 3-bar reversal to the downside would be, this is bar 1. I'll type it in here. Hold on a second. 2. This is bar 1. This is bar 2. And then this is bar 3. And then once price then gets below the low, excuse me, when price gets below the low, of bar 3, your 1, 2, 3, 1, 2, 3 reversal is then intact and complete. Simple as that. All right.
Mhm.
All right. So now we've gone over the ABC reversal, the 1, 2, 3 reversal, the 2B reversal,
Mm.
and now we'll go over 3-bar reversal. Okay. The 3-bar reversal looks just like a 1, 2, 3 reversal, except in this case you have. I'll use this because this is a perfect example right here. Let me give this example right there. That's perfect. So type text here, and then this is 1 bar. This is 2 bar. This is 3, and I apologize. Let me start over. That's a different variation of the 1, 2, 3 reversal. Let me do the 1, 2, 3 reversal like this. That's my apologies. I got ahead of myself. So let me stop. Scratch that.
Okay, so the other pattern that we just finished, that was the 1, 2, 3 pattern.
That was the 1, 2, 3. That was the 1, 2. That was the 3-bar reversal. The pattern here is the 3-bar reversal.
Okay, that one right there. Okay.
Yeah, this is the 3-bar reversal. 1 bar, 2 bar. This is the 3 bar. So that's the 3-bar reversal. A 1, 2, 3 pattern is I got ahead of myself.
Okay, so that's what we're doing now is the 1, 2, 3.
Is what we're doing now. So the 1, 2, 3 reversal is it's easy to see. Oh, that's it right there. Okay. A 1, 2, 3 reversal is when you have price going into a downtrend, or like if you're looking at a downtrend and then you're looking for it to apt to reverse. So let's look at it here. Arrow, arrow, arrow. So you have this down trend, right?
Mm-hmm.
And then you have get my tool out, type text. The 1, 2, 3 reversal is here is 1, 2, and 3. And that involves a series of bars that we call swing highs and swing lows. That is what I told you would be the bonus. So if you have a series of 2 or more bars going in an upward direction, right?
Mm-hmm.
And then a series of 2 or more bars going in a downward direction, like such.
Mm-hmm.
And then it doesn't break the low of 1. So you have 1, and then you have 2, because this then forms what you call a swing lower high. And we'll get into that in just a second. And then that lower high comes down and it doesn't break the lower number 1. If it turns back up, then you have a 1, 2, 3 reversal.
Okay.
So that's to the upside. Okay. And the swing is again 2 or more bars going in one direction. And then the swing down or swing low would be 2 or more bars going in a downward direction. Okay. So that's the 1, 2, 3 reversal to go up. So you have a downtrend, and then that downtrend is then interrupted by giving you a lower high. You thinking it's going to continue, but it does not. Instead, it literally stops before it gets to number 1, and then turns back up and goes in the opposite direction.
Mm.
Okay, so that is the 1, 2, 3 up reversal. Now let's talk about the 1, 2, 3 down reversal. We got an uptrend, 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 uptrend. And then you have, that is a very deep. That's very deep. So let's keep looking. Let's keep looking. That is perfect, I think. Let's see. Yep, perfect. Okay, cool. So you have this high, right? So you have this at 1. Let me type a box in. You have that at 1. You have this at 2. And then you have here at 3. Okay. So you have 1, 2, 3. And this, the third high, is a lower high than the previous high, because if you look at here, just to show you key. There you go. And if you look at this high right there, price did not get above 1, right?
Mm-hmm.
It came down to 2 more bars going down, so a swing low, 2 more bars going up, which is a swing high. But this swing high is lower than this high over here. When price then goes back to the downside, right there, when price then goes down here,
Mm-hmm.
and you have a series of red bars start to form, like so,
Mm-hmm.
then you know for a fact that is going to resume to the downside as it comes down here, right?
Mm-hmm.
So now we've gone over the 7 things the market can do.
Mm-hmm.
We've gone over the 4 kinds of reversals. Now let's go over the only 2 of the 4 reasons to take a trade, in my opinion, right? This is just the way that I trade. There are a few more ways that you can get into trades, but I'm going to highly suggest you stick to these 4. You'll make a lot more money.
Okay.
So now let me get back to my November 2023 area, right? The next thing we're going to talk about is, gentlemen, can we please pause for a second? I want to come in and chime in here for a minute. My line. Man, this thing right here, I don't know if y'all see it being choppy.
Yeah.
I mean, I don't know what y'all want me to do. Here, full disclosure, I have taken 1 trade today, but I wouldn't have called that for y'all. Because it was, again, tight. And it's not, if I'm not saying, literally, I would have said, get in, get out, just like that. It would have literally been get in, get out, just like that. I think it might catch some legs to the downside. But when I tell you it's not trending at all, I'm not making that up. It's literally flat and straight across. Now, if anybody wants to refute that and say, well, that's not the case, please show me otherwise and we can talk about it. Because I could be wrong. But I see flat. That's what I see.
Yeah. Yeah, then if it's going so crazy, it'll be down and just shoot right up, Yeah, it's moving crazy.
So, in my opinion, I wouldn't be telling y'all to do anything. Again, full disclosure, I'll show you what I did so that you can see. Hold on. Let me do it this way. It'll be easy to show you on this chart. 1 second. I'm trying to. Pull up my trade here. It's the trade we were talking about, but again, it happened so quickly. You see, I got in here. This is the 900 chart. There was a 1 bar pullback, and I got out fairly. It got in, shot down, I got out. And I mean, you could have made a couple of more points on it to the downside, and then it shot up for real. And that's all she's been doing. This is the 900 chart. You see how flat she is right here? So let me do this right now. Hold on. So you can see, I'll take that screenshot there. And what we'll do is we'll screenshot every day that trades are taken so that people can see what was done. We took it right here. And I mean, when I say that was the only thing that's done today, I am not exaggerating. Keith, out of curiosity, have you taken any trades?
Yes, I took a trade.
All right, cool. Are you up, down, or sideways?
I'm down. I'm all
All
right.
right. We have to count that in there. What are you down?
I'm down 14.
Huh?
I'm down 14.
Down 14. Okay, so net 3. Okay, net 3. All right. But I'm telling y'all, this is not what you want to be playing in. And this is what I'm talking about. Keeps trading a longer time frame, so you got to give it a little space. But I'm sitting here telling you, this is oh so ridiculous. Oh, so ridiculous. So we'll count that. Even though it says 17 here, we count. They have to. Ooh-wee. When I tell you that's nasty, that is nasty, gents. This thing just. Hold on a second. I know good dang well. Hold on 1 second. Just give me one darn minute. Give me one, because I can't see that. Y'all might be able to see it. I need to pull the. I'm pulling the window over so I can see what this price is. 76.50. I'm gonna sit up here and tell y'all, I see 76.50 working. It got above 76.50. And we got a while, right? We got a while before this thing completes. This is what I'm going to tell you. It got above the 76.50 area here. Right?
Right.
You see this high? I'm gonna draw this horizontal line so y'all can see it. All right. So I'm just. And if you can look straight across, this is the area, is a little bit above that area right there, but we're gonna just draw the line there. If you bring it in, you can see what price has hit that area many a times, right? So we'll spread that back out. Very dangerous to play up in here because you don't know if it's going to go up or come slamming back down, because my bias is to the downside long term. Right now, this to the upside, but if it gets above this 76.50 area and holds above the highs, it's going up. If it doesn't, it has a high probability of this being the high. It has a high probability of this being the high. I don't know. And that's why I'm telling you, I'm not really trading or calling trades for the group as a whole, because this is not necessarily a break-even day and not necessarily a down day, but it ain't necessarily up there either. So you're at a key level at that 76.50, and she's bouncing down up off of it. So that right there is giving me extreme depredation to the upside. And we have to be able to watch and see and not get too enamored by anything. And see, when you expand them out, it's easy to see.
You're breaking up.
Yeah, your voice is breaking up.
Can you hear me good now?
Okay, say something again. Oh no, yeah, you still breaking up.
Can you hear me now?
Yeah.
All right. So what happened was I got to moving stuff around. That's my fault. I got to moving stuff around on this. Oh, 15. I did something very. Can y'all hear me?
Mm-hmm.
Yeah.
I did something I wasn't supposed to do by accident. I was trying to type in 300 and I hit 30 volume and I got like 2 years of data coming in. So that's what happened. So a 30 volume chart is about, and I meant to hit 300. So it's got to circle through. It's got to circle through here. So now we should be back everything. Ooh. All right. So we should be good now. We should be good. Y'all hear me perfectly now?
Yeah.
All right, good. So, gents, I mean, I'm just sitting here telling you, you're in a quandary on this NQ. That 76 area is real. That's why it keeps hitting it. But we don't know if it's going to break through or not. So we have to be very careful. Yeah. We're going to chill, man. You can go back and cue that back up. We're going to chill here for a little bit.
Oh, okay.
I'm going to go back home.
Okay.
Right here, and I'm going to draw it, right? I'm going to draw the line. You got it. Here, here, here. And then you have here. All right. At this point, this is a higher low. This right here is the higher low. Okay. That is where you want to trade. The first higher low after the change in trend. Because you can see that it was in a downtrend here. You see it went into a downtrend. Mm-hmm. Right? Mm-hmm. So when it goes into a, I'm messing up here. Hold on here. There we go. The first higher low after the change in trend. Because you can see that it was in a downtrend here. You see it went into a down. All right. At this point, this is a higher low. This right here, the higher low. Okay.
Okay.
That is where you want to trade. The first higher low after the change in trend. Because you can see that it was in a downtrend here. You see it went into a downtrend, right? So when it goes into I'm messing up here. Hold on here. There we go. Arrow. So we got a downtrend here. And then you have it reversing and going back into an uptrend because this is a low, this is a higher low, this then becomes a higher high, and this is the first higher low in a downtrend. I mean, first higher low, excuse me, in an uptrend. So this is a higher low. So that's one reason to take a trade is a higher low. The first higher low in an uptrend. Okay. And that's one. And then let's look for the same thing in a downtrend. And oh, that's good. That's good. That's good. Okay. So we now have an uptrend. Excuse me while I get all this out of the way. We now have this uptrend. Right? And now it's trying to go into a downtrend. And then as it's trying to go into a downtrend, you can see the uptrend here. And then I'm gonna go back to my lines and I'm gonna draw this so you can see how chaotic it is. So you got here, here, here. So it's really not it's not in any kind of trend, right? It's just moving sideways. But then she goes into a downtrend by making a lower low here. So now she's going into a downtrend. Now this is your first lower high in a downtrend. So this is where you will want to take that trade going to the downside here. So that is it for today. Because I can go on and on and on. I told you 30 minutes has been about 40. So what I want you to do is look over that. I'll give you a quiz the next time we talk.
Okay.
Okay. So did you understand that? That's the next question. Did you understand some of the stuff that I was going through? Did I go too fast, too slow? Give me your thoughts.
I understood I say like 50-50. And that's just only because my learning style, like I have to watch it several more times and really hone in, but that has nothing to do with you. That's just how I learn. I have to watch it over and over to pay attention to every little,
Detail.
thing. Yeah. But no, I'm definitely learning from
Okay.
that.
And that's why I recorded. So you're more than welcome to, get the recording and look at it over and over again if you want. Matter of fact, what I'll do is I'll share the link with you from YouTube.
Okay,
and
perfect. Yeah.
you can then take a look at it. But I'll cut it so it's not super long. But I just hope you got something out of that because the next step, everything that I teach you is going to build on itself. This is the basic foundational thing right here. There are several kinds of charts, but I'll only show you two or three. We'll get into that next time because all I use candlestick charts, and that's what this is called. This is called a candlestick chart. Okay. All right. Well, ma'am, that is it. I appreciate you for showing up, and we will talk to you on the next lesson.
All right. Thank you so much, Rick.
All right. Cool. We'll talk later.
All right.
Good morning again, everyone. everyone. Good morning again this morning. Can y'all hear me fine?
Good morning. Yes, sir.
All right,
Yes.
cool. Cool. So we're going to go over what we're going to go over in part 2 today, but then we'll review part 1 and then we'll get into part 2. Part 2 is going to be 2. We're going to talk about the other 2 reasons. Let's go and pause for a second. Let's go and pause for a second. I think I see something potentially here. So what you've had is, come on, don't just fall apart here. It hit a key level. I told you it hit that key level at 76, which was resistance. I just need a market structure pullback. I will call this trade. If we get a market structure here, it should start to go down. Should. We have everything.
On the 900?
Yeah, on the 900. I just need a market structure. I don't want to give you any one bar pullbacks in light of the fact that it's been moving. But I don't want it to give me a one bar pullback, and that's all it gives me before it falls down either. So I needed to get above. All right, so let's look at it. All right, hold on. This is good. High 44.25, high 45. I need this bar to finish and get above 45 or whatever that high is going to be. I don't want to do any one bar pullbacks. Good. If we get an arrow down, we're going to go 2 contracts to the downside, Quentin,
Okay,
on the arrow down.
okay.
Okay.
In at 4150.
Right.
Come on, push down.
Here's one go.
Come on.
Out.
Come out.
That's fine. That's fine. The gentleman took a loss on that one. But we're trading micro with Quentin. And this is why I say I was thinking it was going to go down there, That's fine. That is fine. Quinn, we want to say live what we did on the micro there. What's your P and L right there?
Negative 15
Okay, that's fine. Ain't no-
contracts.
Yeah, that's fine. So we're down 15. That's the micro, correct?
Micro, correct.
That's correct. So Quentin took a $30 loss on the micro on this, ladies and gentlemen, took a $30 loss on the micro. And then I made 17 points on the mini, and Keith lost 14 points on the mini. So we're up $60 minus $30 plus we're down commissions as well. That's what happened so far today. Basically, essentially today's a break-even day. Don't do that. Don't do that. So we wait. Now, when I tell you this is about this, don't do that.
Mhm.
Are you kidding me? Okay, let's see what we have here.
It never got below my entry price either.
No, it hadn't gotten below that yet. Again, we tried the one that we thought was going to come out because we thought it was going to come out of consolidation at this point. Ladies and gentlemen, it did not. So we have to be very, very patient and careful. And this is why I expressed to Quentin to go on the micro, because you don't know. You don't know if this thing's going to break out of consolidation here or not. And really, it's going to get below it now, though. So we just wait. We'll get an opportunity. We will get our opportunity. God Almighty.
Hmm.
It's just still in that zone.
Yeah, it didn't stay long.
I mean, it's just bouncing up and down. And I mean, we tried, and
Let's just wait till we see that 8100 come out of consolidation.
that's what we're gonna have to do, because now we've gotten ourselves into a situation here, which is fine. I mean, we'll wait. That's all right. I'm just gonna go on mute here for a little bit, guys. I'll be back shortly.
All right, I'm gonna start the video back.
All right.
Okay.
Right. And we're also going to talk about market structures. All right, so that's what we're going to go over in today's session. And I don't know where that went, but I won't worry about it. So let's do it again. Part 2. We're going to go over 2 reasons. Take a trade. And then we're going to go over market structures. That's it. So let's talk about part 1 and get review, right? In part 1, it was Carmen and I on live last time, but in part 1, we discussed 7 things the market can do, which is a higher high, higher low, lower low, lower high, double bottom, double top, and reversal. In part 1, we also talked about the types of reversals. There are 4 of them: the ABC, the 1, 2, 3, the 2B, and the 3-bar reversal. And in part 1, we also went over 2 of the 4 reasons to take a trade, which was a higher low and a lower. Okay. Today's session, we're going to go over part 2. And those are going to be the other 2 reasons to take a trade, which was a higher low. And have another person to join if he would go on mute for me, Genesis. Thank you. Then today's session, what I'll do is I'll go ahead and restart. I know Genesis just got on, but I'll restart and kind of go over Genesis. Last week, we went over the review for part 1, which were the 7 things market can do. If you didn't again and again, if you didn't take if you didn't have a chance to look at that video, or if you did, this is a review for 7 things market can do, which is the higher high, higher low, lower low, lower high, double top, double bottom, and reversals. And went over the 4 types of reversals, which were the ABC, the 1, 2, 3, the 2B, and the 3-bar. And then part 1, we also went over the 2 of the 4 reasons to take a trade, which was the higher low and the lower high. If you put that in your notes, you can have that for later for review, and I'll talk to you guys one-on-one offline after the training session today. Today, we're going to go over the other 2 reasons to take a trade, which would be, write this down. I'm going to type it in the thing here. Other 2 reasons to take a trade one of them would be a divergent lower low, and then a divergent high high. Okay, I see it. Now this is interactive, so if you guys want to ask questions, feel free to, but just go on mute if you're not asking a question. So this is interactive.
Well, first of all, good morning, everybody, and I wanted to welcome our guests, our new team members, or the young ladies that I see, and I say welcome to the team.
Thank you.
So, all right, thanks a lot, Quentin. So that we'll go over divergent. This is divergent lower low and divergent higher high, the other 2 reasons to take a trade. and the market structures. So I'm gonna put Keith on the spot for me. Keith, you should know this, I hope. Can you tell me the type of market structures? Because I'm going to type it here for everybody so that we can kind of get input from everybody besides, other people besides me. So do you know, can you tell them to me? Market structures, you got a higher high. So you got a higher, the higher low, higher high market structure. Hold on a second. Let me type. You want all the market structures just the reason to take the trade market? No. The market structures, like the market structure. Higher low. Okay, market structure. All right, let me type it in because I can't type as fast as you can talk for 1 second. So I got a market structure. Higher low. Market structure, higher high. You got a market structure, higher high. Okay. You got market structure, lower low. Market structure, lower low. Market structure, lower low. Okay. Market structure, lower high. Double top. Market structure, double top. All right, I got you. What about the, and want to give you minutes, I'll tell you the inside bar. I know we don't talk about it much, but the inside bar structure. Structure. Double tops. Structure. Bottom. And then you got a market structure that's a inside bar. I said inside. Okay, so those are your market structures, and we're going to go over and talk about all of them today. So the two reasons to take a trade, the divergent lower low and divergent high high. What we're going to do is we're going to go over how do you define divergence. So let's talk about that. Because if you don't know what divergence is, how are you going to know how to look for divergent high high or divergent lower low? A divergence is when price and the indicators are doing opposite things. Again, divergence is when price and the indicator are doing opposite things, i.e., for example, the indicator is making a lower low, but price is making a higher low, or price is making a lower low, and the indicator itself is making a higher low. And what I'm going to do is now I'm going to add into here that's not the one I want. I want to add my indicator here so that we can go over the divergence. That's the most important thing. Let me move this over here so we can see it here. We'll go over divergence first, right? So what I'm doing now is I'm looking for, and I'm going to get out of this area so that, does everybody have that written down? If you need more time to write this down, let me know. If not, if I don't hear anything, 3, 2, 1, I'm moving so we can look at price and look and find some divergences so you can see what I'm talking about. I see one here and it's clear as day. So now, this is an example, right? Price made a low here and it made a lower low here. So it went lower here, right? So price went down. However, if you look at those exact same 2 points, the indicator made a higher low there. So price one made a lower low. Indicators made a higher low. So price made a lower low, indicator made a higher low. Does that make sense? And if it doesn't, that's okay. I want you to ask questions because I want you to ask me questions so we can go through it kind of, I'm not gonna say it at length, but so we can definitely make sure that you see that. Can you see where the indicator here made a higher low and price made a lower low? That is what you call, that is a pictorial definition of divergence. Okay, that is a pictorial definition of divergence. Let's see if we can find one coming from the top, and that would be a divergent higher high. Let's see if we can find one. And I want it to be obvious too. And we will scroll until we find one. Let's keep scrolling until we see a. That's one right there. I don't like it, but I'm gonna show it to you because I think that it does the purpose. This is here is an example of a divergent higher high. If you compare these 2 points, you compare these 2 peak points right here, they're going in opposite directions. So when that happens, you have a extremely high probability that price will then go in the opposite direction, meaning down in this case. If it's divergent high high, it's probably going to go down. If it's divergent low low, it's probably going to go up, right? So those are the 2 kinds of divergences, right? And those are reasons to take a trade. Those are the other 2 reasons to take a trade. When you have a divergent high high, or you have divergent lower low. So I gave you 2 examples. Does anybody need me to do any more examples or have any questions that they may have for me right now?
But just to clarify, when you do see that, like you just drew there, that if it's that way, if it's a divergent higher high, then there's a good probability it's going to go into a downtrend or down.
Oh, it's going to go down. Correct. That is absolutely right.
Then vice versa, if it's like on the other example, if it's a lower low, then it's a good chance it's going to go
up. Correct. Like in this example here, you see the divergence.
And then it does it. You see it clearly go.
Right. Right. So that you have it's extremely high probability. And when you have confirmed, and when you have divergence going from the top to the bottom or from the bottom to the top. So it's pretty high probability, right? The next thing we're going to do is go over market structures, okay? I am going to expand this chart out a lot, and we're going to talk about market structures, right? So when you talk about a market structure, right? When you're talking about market structures, higher high, in this case, I would use this example. You see this bar has a high, then this bar has a higher high. When price breaks the high of this bar, let me use my tool to get my arrow here. When price breaks the high of this bar right here, then you have what you call a market structure high, right? So, and I did it wrong. Let me move the drawing so you can see it. When price breaks the high, you have one high here, you have this high here. So when price breaks this high, now you have a market structure to go up. And here's a firm way to look at this. When market structure happens to go up, momentum is also considered to be up. Let me show you what a market structure down looks like. Market structure down, as far as the market structure low is concerned, it's the exact same thing. You have this low, and then you have this low. When price then, go back to my tools, breaks this low bar here, when it breaks that low bar there, then you have a market structure going to the downside. When it does that, you have a high probability of that momentum now being down and it continuing to go down to some degree. So that's the market structure high, and that's the market structure's low going down, right? Now, let's talk about the inside bar, and I'm gonna find a bar that's inside bar, and I'm gonna highlight it here. The market structure that's the inside bar is here. This bar here, I'm highlighting it and I'm trying to make it big so you can see it. This bar here is inside, and let me do it this way because you can't see it. So let me erase that and then put an arrow, right? But you see the bar that I'm talking about here, so let me erase that. And then let me give it an arrow here. That bar there, the bar right there, is inside the previous bar, meaning that it has a lower high than the previous bar and a higher low than the previous bar. That is an indecision bar. And essentially all that means is pricing is indecisive as to which direction it's going to go. But the probability is based on the color of that candlestick, right? Based on the color of this candlestick, and we'll get into that too. That's going to be a bonus that I'll tell you guys about later on. The candlestick here is red. So this inside bar turned red. So you have a high probability if it breaks the low of this inside bar, it's going to go down. And that's exactly what it did, right? We'll look and see if we can find an inside bar that's green. We'll look for one of those. Oh, this is a green inside bar. This is a green inside bar. Here, let me draw an arrow. Here we go. This bar here has a lower high and a higher low than this red bar, and it turned green. Now, this is how this worked, and I think this is very interesting to show. You see how then price made a lower high, and it turned red, but the next bar, it turned green and it took out. That's what you call a fake out. That's a little bonus information for you right there. That's literally called a fake out, because that inside bar, this bar here turned red, faked everybody out, got everybody scared, and then took right back off to the upside. And that happens often. And I want to look for another on this information for you right there. That's literally called a fake out, because that inside bar, this bar here turned red, faked everybody out, got everybody scared, and then took right back off to the upside. And that happens often. And I want to look for another one where it actually does what it's supposed to do, because we want to look for a green inside bar that this here is a green inside bar. Doesn't look like it, but I think that it is. Nope, it's double bottom. Double bottom. So that's a double bottom. So hold on. Looking for a green inside bar. That's another green inside bar, and as you can see, it went up from there, because that green bar here, again, let me draw the arrow. So if you look and see here, see that? Then the inside bar, bars has a higher low than the previous bar and a lower high, and it turns green, and then it shoots. It goes up. This is a consolidation because it really doesn't move anywhere. It goes up, and it comes down, and it goes back up, and then it shoots down, and then it goes back up. So it really, that's kind of consolidation area. But those are your market structures. We also want to go over a double bottom and double top. Then I saw one, and then I scrolled past it. So let me see if I can find it again, because I want to go over in.
Can I ask a question?
Yes, sir.
On that inside bar that you show with the fake out,
Right.
is that considered an inside bar market structure?
Yes.
Even though it didn't? Okay. So inside bars, I thought they depended on the next bar. They had to break the high or the low, depending on which way you were going. So
No.
fake out. I didn't know. I was asking, would that be considered still considered a market structure? It was an inside bar, but the next bar went down, unless it was both of them on the outside bar.
Right. So if it's an inside bar, it's considered a market structure, because if the next bar breaks up or down, it creates the market structure. Does that make sense what I'm saying?
I guess that's what I'm asking. Okay.
Yeah. So if it breaks,
Next bar has that. The next bar determines what type of market structure. Inside bar market structure. But
it's an inside market structure, right?
Okay.
Got it. So let's look for a double top and a double bottom. I'm looking for those are sometimes harder to find, but we will
Just
find.
past the green bars, just past one, the double bottom. Go back a little bit. Go right there.
Yeah, you're right. Look at you. Look at your keen eyes, keen eyes. So, ladies and gentlemen, this would be considered. Can you go ahead and pause it for a second, Quinn? I'm gonna talk for a minute here. Ladies and gentlemen, today is consolidating. When you first start trading, what you don't do is trade in this consolidation, because you're only asking for trouble. We took one trade and it actually ended up working, but it stopped you out first, and we had a second entry. I just didn't take it because I'm not taking a second entry in consolidation. Okay, that's just a rule I have. If it was trending, I would have took the second entry and we would have made, could have made the money back. But I don't take the second entry in consolidation because that lets you know it's not moving fluidly. Now, we were in at 41 and we could have got out plus 10 points or, plus 8, 9 points or whatever the case is per contract. And we were in 2 micro contracts at that point. Not worth the risk, right? The number one rule of trading is capital preservation, risk management. It's not working. It's not working to the downside. It's not working to the upside. You look at your larger time frames, they're very, very flat. They're very, very flat. I want to trade so bad, it's ridiculous. as far as calling one for live for the for YouTube, but I wouldn't dare say, hey, I take this, because I wouldn't. Now I'm trading some on my own. My guys are trading these sub accounts and the combined accounts and stuff like that on their own. But the advice to them even is trade very carefully. Don't be too risky in this situation. Live to fight another day. Right. We may be up a little bit today, maybe down a little bit today, but regardless of what it is, you will know. Right. Right now, I'm up 26 points. I was up 17, then I took a small loss, and then I took the winner. But that's me trading on my own in my own brain, doing my own thing, right? Doing the exact same thing I'm teaching. I am just trading, getting in and getting out, being nimble. Calling it for YouTube, it needs to be something that we can hold for a second, that we can allow to kind of run and get in our favor. Maybe add to the trade. Today's been ain't no other way to put it. If you're trading in this, you asking for trouble. And somebody sent me a private message and said, well, I don't trade, know how to use volume charts. I don't understand how they work. So I use time charts because that's what I always use. So, you know what I did? I pulled up a time chart, and I'm going to show you what it looks like. That's 15-minute chart. Looks the exact same way. Right? Looks the exact same way. It looks like it's trying to trend down, but not really. Right? So, got to be very, very careful of these things when you're in here trading. Because if not, you're just death by 1,000 cuts. And instead of me getting Ginsu knifed, if y'all don't know what a Ginsu knife is, I'm telling my age. I'm not in here to get cut up. I'm not doing it. So we are here. We didn't have any trades yesterday. Called for the live. Today we called a live micro trade, 2 contracts, something very minimal. Because again, if you hear me talking about micro today, that lets you know that I have zero confidence that this thing is going to work to any large degree. If you hear me say, we're not going micro, we're going to mini, and put 2 contracts on, then I'm very confident. And I know something that's probably out there, right? But that hasn't been the case the last 2 days. If you look at the last 2 days, since 9:30, it gave you a couple of moves yesterday that you could have had, right? Being honest, just being real about it. But if you didn't take your money, you got back into the chop, and it only gave you that one trade. Today, same kind of thing, right? Same kind of thing. It gave you this little move down, and you could have maybe made a little money on the trade. And one error that I made, let me just be completely honest with you right here. One error that I made today was that trade that I called. If I'm not mistaken, the momentum on the next largest time frame was up. It went down eventually, but it was up when I called the trade. And when it gave you the downside momentum on the trade, let me move this out of the way so you can see what I'm talking about. When it gave you the downside momentum here on the trade, everything was down at this point. So you could have taken, that's tough. This was the only trade that I see, and it was right on the brink. If you didn't take that, there was nothing to be had today. Please listen to what I'm saying to you. Please. Capital preservation. capital preservation, capital preservation, risk management, risk management, risk management, money management, money management, money management. All those things are kind of counterparts to each other. They don't mean the exact same thing at the exact same time, but at the end of the day, you're not trying to get out of the habit of thinking you're a trader. This is a business. What you're trying to do is buy something for $5 and sell it for 10. You can't buy something for 10 and sell it for 10, you're going to lose. You can't buy something for 5 and sell it for 5. You're going to lose. Think money management. Don't think trading. Think money management. Think I own a business and I'm trying to buy something for 5 and I'm trying to sell it for 10. And I'm trying to do that over and over and over and over and over again. Have that thought process in your brain. This is nothing more than buying and selling without having to talk to human beings. But the thing about it is, a lot of people have to get over that hurdle of realizing what this really is. When you look at it like that, your thought process may be a little different. So please give me questions, comments, concerns, anything to the liking of regarding trading so that I can be of assistance. The young man I'm sorry, go ahead, please.
No, go ahead.
No, because I was gonna go into what somebody else was asking. So go ahead and I'll get to them last.
Well, no, I didn't have a particular question. I was just gonna say, since I started, I think this has been the most interesting that I've seen the market move. Like, I mean, I've seen it consolidate and stuff like that, but yeah, this is not it right here. I mean, you know, I like it kind of goes back. Like, I just keep thinking about, you know, you saying you have to make your decisions based off what the market is doing. You can't like really go in there with your own mentality.
There's a lot of truth to that. There is a lot of truth to that.
That's probably, I mean, this has been the most interesting day I've seen so far. Just, I guess, strange to somebody that's fairly new to it, you know.
Yeah, I'm going to tell you guys, right? I took that trade earlier, but the confidence just wasn't there for me, right? And I knew it was only a 6 or 7 point risk per contract. So I was like, this is about the best risk you're gonna have all day. Right. And if it works, it's gonna work nice. And if it doesn't work, you're gonna lose 7 points a contract. I'm sitting here telling you, it's been tough to call for the group. Now I've taken trades on my own because I'm buying for 5 and selling for 10. But because I buy for 5 and sell it for 10, I have to take into account the technology piece of this. We're not sitting here together and me saying, hey, get in right here, get out right here.
Yeah.
There's a lag, regardless of if you want to believe it or not. There's a lag between me saying get in and get out. We're trading in seconds, milliseconds, not even milliseconds, but seconds. So I'd have to give you time to be able to make a move. And sometimes you don't have that time. I know that sounds really weird to some, but I'm telling you now, this right here is a promising trade for me. But I'm not taking this trade because we didn't take the first entry. And the first entry worked well too. Like this right here worked well. It did, it worked well. But again, that is in consolidation. in consolidation. And we will fully disclose everything that we're doing every day. I'll let you see exactly what I did. I'll have Keith, if you want to see what Keith's done, I'll let Keith pull up and show you what he's done. I'll let Quentin pull up and show you what he's done. Right now, I mean, I'm showing my screen. So right now, I'll show you this so you can see it, right? And this is where I'm getting my guys to, right? This is where I'm getting my guys to so that they can be able to do this too. See, I'm up 26 points, but I can't count it. We're a team, right? Just like the other on Friday, I was down 40 points, but my team was up 80 points. So we together made 40 points. That was on Friday. My team. It's not just about me, right? Because I tell people this, if you want to follow me, I'm the guy that's going to try to help you be better. And I'm not going to feed you fish. I'm trying to teach you to fish. However, I know when you trying to learn how to fish, I'm sitting over here just putting fish in my bucket, and I know you don't have anything in your bucket. I'm willing to share my fish with you until you learn how to fish on your own. That's how we roll over here. On that note, get some. I'm going on mute. Right. This is what you call a market structure. And when you see a double bottom, it typically is a reversal pattern. That means price is going to then, from a double bottom standpoint, is then going to go up. Right. So from a double bottom perspective, you then see price go in an upward direction. Okay. So you see that. And then let's look for the double top. If y'all see it, point it out. I'm looking forward to.
And you said on that double bottom there, that's an indication which way the trend is going to go?
Well, price.
Right.
Price at that particular point, if you get a double bottom, price is typically going to go up if it breaks the high of the bar that powers the double bottom.
Okay, yeah.
So if it broke this high, it's typically going to go in this direction.
Okay.
All right. That's a good question, point. I appreciate that. So that's good. I'm looking for a double top. If somebody sees one. Hey, fellas. I don't. I'm going to go on. Can y'all hear me? I don't think.
Yeah.
All right, I'm gonna go on mute here. I gotta take this phone call fairly quickly, but I'll be back here shortly. So if something happens, just chime in. I can hear you, but I'm going to be taking care of something on the other end. So if you see something, say something, but I'll be on the phone, okay?
All right.
All right.
You might remember when you said the resistance line was? It was 70, it was 60, wasn't it?
What do you say, Keith?
Anybody remember what the resistance line was? 60 or 70?
What is it? I thought he said like 75.
75? All right.
Yeah, I think that's what he said, if I'm not mistaken.
I'm trying to draw it on mine. I don't I'm getting 7250, but
72.50.
yeah, just want to
Okay,
make
now
sure
you
that,
might though, but I know it was in the 70s. I do know that.
yeah, I just want to kind of get an idea of what we need to wait for it to break through when we start trying to trade. Because I think a lot of times it's hitting right up there and it pull back in and then go back out again.
Mm.
Just man, this is ridiculously flat. But the screen isn't flushed. You know, is he close enough to flush it? Yeah.
Gentlemen, I am very, very interested in this short again. So if we get a market structure pullback, I will be calling the short.
Okay.
Now, so let me show everybody what's the difference between this short and the previous shorts. This is the 8100 volume chart. I'm going to make it a little bigger so you can see. The short that I was interested in before happened over here. And it was nice. It got below. Let me show you what I see. So you can kind of come into my world a little bit. It got below this low here by one tick, which made it kind of a support area, and then bounced up off of it. But when it got above, when it went up here, it made a lower high. So now we have a lower low and a lower high, right? And then this here was an ABC pattern to go back down because we were trending down from earlier this morning. It created a wedge, which allowed us to see that. So now we have the market moving in a downward direction here. So if this thing does turn over, it may give us some move to the downside. Plus, it may be breathing, and you might have others taking profits near this top from an institutional standpoint. We don't know that for absolute certain, but it is very, very stagnant here in this resistance area. But I told you guys that before. That zone was very, 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 that's going to be very, very tough to get through. It's not going to just happen just like that because there is a lot of volume that is coming into the market at that particular point. So what we have to do now is wait for our opportunities, wait for the opportunity and get our market structure pullback and then take it. Now, I am not taking any one-bar pullbacks, and they're legitimate trades too. If you get a one-bar pullback, that's a legitimate trade. But I'm not taking any one-bar pullbacks. If I don't get a market structure, I am not trading. So that is my rule. That is what I'm going to do. We're here, and we're just watching for that now. And what's going to be extremely interesting is if we get a market structure on this bearish bar with a bullish close. You can see this here. This is a bearish bar with a bullish close here. So if it gets above this high and then fails, that's going to be an even bigger sign that the market may be coming down. But I don't know that for sure yet. We just have to watch it and see. So I'm going to go on mute. And if you see that it gives you a market structure on that 900, somebody please say something.
Okay.
But that's what I see right now. So I'm gonna go on mute until I kind of, oh, well, never mind. It literally didn't give me a shot. So let me see here. Just give me a second. I'm trying to pull everything over where I can see it. All right, there we go. It should have broke that high 51, high 51.50. This is a little tough. Let's watch and see how this thing rolls up here. Let's see how it rolls up. I was kind of excited at first. Not really as excited now because I don't know, right? I mean, I don't. So let me tell you how I will take this trade. If in fact it gives me a bullish bar with a bearish close, I will take it at the break of that low. So this low would be 48.75 right now, but it has to give in the next 54 contracts, it has to come down toward that low and close bearish. If it doesn't close as a bearish bar,
Hello.
Oh no.
kept going. So this is very, very interesting. All right, guys, I'm gonna go on mute. You can cue it up. Q. I'm gonna go on mute here. I'm not gonna. As soon as every time I get ready to say I'm about to, but it's 720 contracts, so it's got a minute.
Yeah, that's why I left it off for a minute because it keeps playing with us a little bit.
A little bit. It has a high and a low of 54 and 50, which is not bad at all. So we'll see how low this thing gets. Y'all can hear me well, right?
Yeah.
So 488, 470 contracts to go. It just depends on how this bar finishes. The fact that she went low and then going back toward the high gives me reason for pause. However, we'll load up two in the chamber, Quentin.
Okay.
If she closes low, we'll take it. If not, we won't.
Is Quinn?
Yeah, I'm here.
Yeah, I mean, yeah, Keith, you do what you need to do on that side because I know you're trading a different time frame. I don't want you trading what we're doing because I don't want to interfere with your time frame. So Quentin, if this thing closes, well, let's just see here.
Am I waiting for the arrow or just waiting for it to close low
No, neither. You're waiting for it to close low, then break below that low
on the 900?
on the 900. Correct. See, you see what I'm talking about?
Mm-hmm.
You see how this right here, you're in trouble. If you did the arrow,
Yeah.
it closed green. You don't want that. And it's a very, 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 very bullish bar because it went low and then shot up to the high. That is also very interesting. But again, this is why, ladies and gentlemen, I have the indicators as confirmation, and I can prove it to you right now. Quentin, I'm gonna get you to do me a favor. Can you tell me what all of the indicators on the first three charts, meaning the 8100, the 2700, and the 900, can you tell me what they're all doing? The momentum indicators.
So your momentum, your long-term momentum but they're different. The 8100, the 8100.
That's it.
Okay.
They are different, right? This right here sucks because she may be getting ready to turn over here. Ooh, this is every time you get excited about it, it's like, but they're all different, ladies and gentlemen. That's why I have the indicators on there because sometimes when you're looking at price, you get excited about a trade. But to be honest with you, the 2700 says we're trying to go up long term. Then 8100 says we're trying to go down long term. Nothing's aligned. When everything is not aligned, we are not here to gamble. We are not here because we're trying to entertain ourselves. We're here to try to make money. So if in my humble opinion, when you have a situation like this, chill out. I am gonna go about looking for the trade, but at the same time, when it's not doing what I want it to do, I'm skipping out. Because my way of trading is very simple. I wait for the big money to tell me which way they're going. And then once they get to going where they're going, I just say when they make a pause in the market, I'll hop on the train. But they haven't really told me anything. This bar did finish bearish, right? So technically, right, just technically speaking, from a price standpoint only, if this bar breaks below this 46, you can put in 46 even and 54 and have a potential trade to the downside. The only thing about it is, as I keep telling you, the market's in a range. You playing in a range is extremely dangerous. I've been doing this a very, very long time, and I don't typically trade in ranges unless I think it's about to break out of a range. It doesn't look like it's trying to break out of the range to me. I thought at one point it would have been, but let me show you why I don't think it's trying to break out of the range.
Excuse me, well, I gotta go take care of a few things. I'm gonna try to be back by 2 o'clock.
Okay, cool. I'm going to be here. I'll be here all day on and off, and
All right.
all right. Ladies and gentlemen, I don't know what to do here. So when I get into a situation where I don't know what to do, I chill. Point blank, period. Now I'm going to tell you, in my humble opinion, if she breaks this low at 46, I think she's going to break the. If she breaks this low at 46, I think she's going to get below 40. But it's not my trade. Sorry, not my trade because I'm not trading this consolidation. So on that note, you can cue it up, Q. I'm going about my merry way. I'm not even going to watch this. I'll be back shortly.
Okay.
No, it's good stuff. Didn't you have a double top earlier when you was trying to find an inside bar market structure?
I had that double bottom.
The double bottom?
Yeah, I had the double bottom. And that's the one Quentin pointed out when we came through. Come on now.
No, right there maybe?
Right where?
Red and green bar?
Right here?
Further over.
Right here. You're talking about these two. That's close.
Yes, the next two.
Right, these two right here is red and green bar right here, right?
No, the next two red and green bar.
Oh, that is, man, I must have the glasses on because I didn't see that. That's pretty good, Keith.
The better one might be the other one if that's one next to it.
It's close.
Yeah, because the double top's supposed to go down. So if you look at
Yeah, and it didn't. In this case, because it didn't break the low, right?
so if you keep going over 7 bars, 6 bars, is that one? Okay. To the right.
Small stem on the red one.
That's what I can't. That's what I'm debating.
Yeah, you can't see that one. So let's go to something that's a little bit better here. We went over that. Went over those. Went over those. Those. That is amazing.
Right there. No.
Yeah.
Right. Missed about 2.
But you do have a double top, though. It's a double
Yeah.
top, but it's. Let's see what it does. Is it gonna go down? It's a red bar right here, inside bar, then a double top. You see that? Right there.
That's
Right here. Right here. It is a double top. Right there. This bar and this bar. How tweezer tops. Tweezer tops are nothing more than the bars that are right next to each other.
So they don't have, yeah, I was gonna say they have to be next to each other.
They don't have to be next to each other, but for teaching purposes, it's easier for people to see.
Yeah.
There it is.
Right there.
That's the double top, right? That's the one. And ladies and gentlemen, this one here, in my opinion, is like, that's like you salivated something like that, right? Because when you hit this market structure up, because you have an inside bar that broke to the upside, it then gives you a double top, and if it breaks this low, it has a gargantuan opportunity to go to the downside. I mean, that's almost a no-brainer trade.
What else is there if you want to pop quiz?
There you go, Pete.
So no, we're just going to stick to the double top. I mean, because we're just sticking to the market structures there.
Yeah, there's an ABC pattern. You talked about that.
Yeah. So, yeah, we're not getting nobody no quiz today because they'll be like, okay, man, we didn't come here prepared for that. So yeah, but those are your market structures, and those are your other two reasons to take a trade. So let's now go back and review what we talked about today. Right? Let's go back and review what we talked about today.
If I can already see what kind of teacher you are.
Right?
I didn't say you were.
Yeah, you feel like
So here we go. Right? Part 2. We went over, hold on a second, because I think I did that. Let me go back and rescale my reset. I don't like that at all. All right, so here we go. Today, we went over the market structure high, the market structure lows, right? We went over the double tops and double bottoms, and we went over the inside bar. We also went over the lower lows, the version lower low, and the version high highs, right? As a review, and continue, to go over that review again. In part 1, we went over quite a bit, which was the 7 things the market can do, which is there. The reversals, which are there. And then the two of the 4 reasons to take a trade, which is the simpler reason to take a trade. So we've gone over all of those things. The next class we have, we're going to be putting this all together, and we're going to talk about multiple time frames and how you put that all together for a trading plan and to put the probabilities in your favor, right? That's what we're going to do next. As a matter of fact, let me go ahead and show you this. I talk about the candlestick bars, but these are what you call candlesticks. But in trading, right, this is bonus material, not anything extravagant, but something for you to kind of sink your teeth into. You have candlestick bars, but you also have, I like to mess with people with this one. You ready? Watch this. You have some people who trade on mountain charts. That's what you see on CNBC and all that kind of stuff. You see, you see the mountain charts. You also have those are high, low, and close bars. Those are called high, low, and close bars. You also have, these are just the popular ones, right? That's something that people use. You also have point and figure. And point and figure looks like such. Oh my goodness. They disappeared. Hold on. Those are wrinkle bars. Wrinkle bars are nothing more than candlesticks without the structure for the most part, right? And then that's it. So those are your 4 main types of charts. your bar charts, candlestick charts, mountain charts, and also your Renko charts. So with that being said, that is class for today. And that, would you say?
You record the session?
I did. It's on YouTube.
Oh,
Yeah.
we on the, okay.
Yeah. So it's live on YouTube. So so it is that. And please tell me, are there any questions and or comments for me right now? If there's not, I'm not going to hold you ladies and gentlemen any longer. Just let me know. I'll give you a couple of minutes just to make sure.
Nah, that was pretty good. I don't have any questions at the moment.
All right, cool. So, well, if that's it, Genesis, you got any questions? Carmen, you got any questions?
I don't have any questions. Thank you.
Oh, absolutely, Genesis. It was good talking to you. Good seeing you come in today.
Of course. I didn't have no plans this morning.
Cool. All right. Well, we'll talk to you next time, okay?
Okay.
All right. Bye-bye.
Bye.
Carmen, you got anything?
Not at the moment. I mean, I'm gonna go and rewatch it again and take some more detailed notes, but I don't think I have any questions currently for you.
Okay. All right. Cool. I just want to make sure because I was trying to hit the button, but I didn't get on there. Okay, cool. So, all right. If that's the case, everybody, we're going to go ahead and call this today. And you guys have a very, very happy new year. And I will see you.
But don't forget to,
I'll talk to everybody later on today anyway. So I'll just see you guys a little bit later on.
don't forget to subscribe to the channel. And you can also ask questions at support@theprophetstalker.com. Hello again, Carmen.
How you doing, Quentin?
I'm just right. Just like I want to be.
Right.
Hold on a second. All right, everyone, we're going to be getting started with part 3 of our how to read the markets, right? So we'll get started here in just a second. Give me a slight moment to go ahead and get everything loaded up, and I'll be with you in 1 second.
All right.
All right, ladies and gentlemen, part 3 of this section of how to read the markets is about putting it all together. In the previous sections, previous parts, we've talked about the 4 things the market can do, the 7 things the market can do, which is a higher high, higher low, lower low, lower high, double bottom, double top, and reverse. The 4 reasons to take a trade, which is a lower high, a higher low, divergent higher high, and divergent lower low. And I apologize, you can't see my face, but now you will. All right, so here we are. So, and we also talked about the market structures, the inside bar market structure, the higher high market structure, the lower low market structure, the higher low market structure, and the lower high market structure. We also talked about the divergent trades and how to see those divergent trades. So today we're going to go over how we put it all together so that we have an identification on how exactly to read the markets. And it literally is like reading a newspaper, like reading books. You just have to read it from left to right. And when everything lines up, then you know you have an opportunity that has a high probability of winning. And in addition, you have an opportunity to win big. So here we go. We're gonna go over everything, and then I'm gonna go over everything as a whole. And then we're gonna segment each chart out so you can see what I'm saying. All right.
All right.
So example one is right here. I'm going to use my pointer most of the time. Okay, example one is right here where you see the market is moving down. Everybody can see the market is moving down and everything's red and red. So because the market is moving down and everything is red and red, now we know we need to be looking for a short. All right. And everything is now moving down red and red on my new chart. To the left, to the right of that, which is the 2700. The largest time frame is the 8100. You have the 8100, 2700, 900, and 300. So on the 2700 chart, now that we see everything is going down red and red on our 8100, now we look into our 2700 for a pause in the market. Where you see that little green bar right there, there's an identification for a pause, right? That's an identification for a pause. And then if you come over here to then the 900, you can see very clearly why I talk about the market structures. This is a market structure lower high. They made a higher high and a higher low here, and then it broke that high. So this is a market structure here, and it's a lower high. And then the only thing we do then at that point is we look over here and we see where we have the ABC pattern. And then when price closes below that ABC pattern, we enter into our trade. As simple as that. You can see very clearly why I talked about the market structures. This is a market structure lower high. They made a higher high and a higher low here, and then it broke that high. So this is a market structure here, and it's a lower high. And then the only thing we do then at that point is we look over here and we see where we have the ABC pattern. And then when price closes below that ABC pattern, we enter into our trade. As simple as that. That's all we do for all of our trades. Now, let me show you, let me give you a few examples of this because I think it was 4 of them yesterday. It does this repetitively all the time. And once you understand how to read that, then and only then will you be able to consistently be able to make money in the markets on a consistent basis and not have any worry, because you'll know exactly what you're doing, right? So let's go to the second one, which is the same thing. Market's moving down as we see on the 8100, correct?
Mm-hmm.
You see the pause in the market that happened, right? And then you see where the market gave you, the market structure gave you a higher low. It broke the high of that bar, right? On the 900. And then on the 300, where you see that green box, price closes below the ABC pattern, and then she goes down. So that's trade 2. There were 4 trades yesterday, all of them won, and I'll show them to you. So let's keep going.
And that one, we entering that on the 300.
Yes.
Okay.
So same thing here. We have another lower high. Market's going down. Then once the market starts going down, let me make sure I got sorry. And then you see here where it gives you the pause in the market. See that green bar at the pause, right? Right there. And then you see the market structure here, the lower high. I'll scroll it over a little bit so you can see that it's a lower high than all the previous bars. And then here, you see where you have the ABC pattern. It's slight, but it's an ABC pattern here. And that's that 4 reversals. And I apologize because I didn't mention that before. The 4 kinds of reversals. You got the 2B, 3B, 1, 2, 3, and the ABC.
How many bars, form a market structure?
We would have to go back to the second part of the class, but you can have many kinds of market structures. You have 3 bars, you can have 4 bars, but you have to have at least 3 bars to form market structure.
Thank you.
All right, all right. And here you see the ABC pattern,
Mm-hmm.
and you see it close below into the trade, and as you can see, it just cascaded. So, gentlemen, let's go over this because I think you have something here now brewing. Now you have complete alignment on your momentum. Your trend is now up, or it's not really up, but it's up on your smaller time frames. It's still a consolidation, but this thing may have a high probability of pushing to the upside here, because this is the first time you've had alignment since earlier this morning.
Mm-hmm.
Still in the range. I thought it may go down again. It didn't give us what we want to see to go down. So now we need to see a market structure pullback on this 900 of some kind. We got to have a market structure pullback, preferably to the 9 moving average, to the 10 moving average, excuse me, and back down on the 900 volume chart. So we're looking for a market structure, and then we'll take the move to the upside if in fact it happens. So that's what we're looking for. Will it give us the market structure is the question. Really?
It's trying. About 400 contracts. Hmm.
Say that with me one more time, Queen.
I just said it's trying.
Yeah, it need to break this. We need 2 lows here. This low here has a low of.
I want to see that green EMA continue to cross up on the 8100.
So let's see if this thing has a low here. 78, 77 and a quarter. Cool. So we need this to get below 77 and a quarter. So once that happens, we'll have an opportunity. It needs to get below 77 and a quarter.
Okay.
Come on, don't just take off from here. That's a 1 bar. Don't be no 1 bar pullback here, guys. I'm telling you, she's going to break through because she's above that 77 area. Golly, come on down here, man. Break down below. Get below 78. Ew. If we break that high, it's going to take off, but it's not our trade. So it's not a trade on the time frames we're looking at. You would have an entry at 85, 84.50 with a stop of 77. And then if you were in it, you would have to give it some room. Maybe she'll give it to us on this iteration to the downside. Come on down.
Yeah, I know something interesting. It's not giving much stem on the bottom.
Push down. Let's go. Push down for me. I want to play. Are you serious? Don't want me to play, huh? $84.50. 7 points will be 91.50. I guess she's like, that's all you're getting from me, guy. It was an inside bar market structure, which we don't play. It went 1-1 in your favor. That sucks. It didn't give us our trade. All right. If you get the arrow up, you're going to take this trade here.
Okay.
It should work to some degree. I'm glad it's pulling back like this. This is really nice. Come on, push.
All right, Ed at 87.75.
Got to get us a little room here.
10.4. Don't do that. Come on.
Hold up, just hold up. Come on now. Push. Push. Let's go now. Come on, push up here now. Ugh. That's tough. Out.
I'm out.
All right. That's fine. That is fine. So we have to be full disclosure. What do you, this the micro, everybody?
Yeah, 2 micros on that one, -22, total -37.
That's okay. We tried today, ladies and gentlemen. That is it for today. Let me give you what the numbers are. That was the micro. So we took trade on micro, lost twice. Let me pull over my chart so you can see what I did. This is on the mini here. This was on the mini. I was hesitant to take the trade, but neither here nor there. We had to try it because it was a legit setup. It just didn't work. The first one was on consolidation, gave you a second entry. It didn't work. So you can see I'm up 27 on the mini. I'm up 26 on the mini. Keith was down, if I'm not mistaken, 14 on the whatchamacallit. So we're up 12 points on the micro. So this is how this works. We're up 12 points on the mini, excuse me. So let me change this to, hold on a second. Well, I want everybody to see this so we can make sure that the accounting is right. I'm going to be upset if this trade moves like the other one did, but it's okay. It's all right. Come on, don't do that. I tried to give it some room, but I had my stop and Oof. Have to follow our rules, ladies and gentlemen. I'm not taking that trade because we've been in consolidation. I took 2 trades. I took 1 short, 1 long in this consolidation area. It did not continue to push on either trade. We took some small losses here. Let me go ahead and here and go to global settings and go to, hold on. 2 settings. I want everybody to see what I'm doing here. I don't need a trial. Okay. Customize chart trade menu. Nope, that's not it. Hold on. And I'm going to stay on. There's nothing you can do about today. It's consolidate. And we took a trade coming out of consolidation twice. So we just have to wait. Not data trade service, customize. I did this before and I just don't remember where it is. Here, just convert trade activity. No. Oh. Chart trade settings. I'm looking for the one that says points. Nope, that's not it. Hold on. Oh, that's not it. Hold on. I want y'all to see this live here. It's not moving anywhere, ladies and gentlemen. It got to the, I'm thinking it's going to break out of the range. I gave it an opportunity once to the downside, once to the upside. Neither time broke out of the range, so we just chill. Hold on a second. Chart down. Oh. That's my account, so hold on a second here. And I don't know where it is, guys. I'm just trying to show this here. Trade. All right, each one is different. So neither here nor there. All right, so we have a situation where we had a mixed bag today. Yesterday we did pretty good. Today we had a mixed bag. Keith was down 14 points on the mini. I was up 26 points on the mini, and Quentin was down 67 points on the micro, which is equivalent to about 6.7 points. Let's pull up the calculator and do it live with everybody so you can see what's it going to look like. All right. So let me pull up my calculator. What's your exact total?
Negative 37.
negative 37 points or $37.
Oh no, the dollars is going to be $74. Negative 74.
Okay, 74. It's no big deal. Okay, so negative 74, right? And then we got 14 times 20, negative 280. Okay. And then we got 26 times 20 equals 520 minus 280 minus 74 equal 166. And then we have to take out commissions. You took 4 trades on 2 contracts apiece, right? You took 2 trades on 2 contracts apiece, correct?
That's correct.
So clear. So now we need to do 1.2 times 4. That equals 4.8. Okay. And then Keith took 1 trade minus 14. So that's 4.26 times 1 equals 4.26. So remember, we got 166. We got to subtract 480 and 426, 426, right? And we also have to take into consideration, let's look at my trades live. Let's look at them for what they are, not what we want them to be, right? I wish today was better, but we want to be transparent so we can grow. So for me, I can barely see that, guys. I don't know if you can see it. I took 3 trades. You can see all of them are 2 contracts apiece. I won on 1 there. And then, no, I took 4 trades, excuse me. I won on 1 there, lost on 1, and then made money on 2. Okay. So that's how I ended up with my 26 points. So I had a 75% winning percentage on mine. And watch this. That price is still at that 78 area, Quentin. So it's not like we were wrong about the trade. It's just in consolidation, man. Ain't nothing you can do about that. So I took 4 trades on 2 contracts apiece. That's what I did on my side. All right. So 4.26 times 6 trades, 8 trades, because I took 4 different trades at 2 contracts apiece. So now what we got to do is that's 3408, right? So now what we have to do is subtract 166, which was the gross net profit, minus 4.8. Minus 4.26 minus 3408. That's 122.86 today. So we're going to put that in our journal. And everybody get to see it. And we're going to do this every day. Every day. I'm trying to pull it up, guys. Hold on. There it is. So today is, what did we say? 126, not 156. 126 dot. $122.86, excuse me. 122.86. So that's what it is for today. All right. Yesterday we met the goal. Today we did not meet the goal. I don't care how much we met the goal by. I don't care how much we didn't meet the goal by. It's either meet or didn't meet. Right. It's black and white. If we blew it out the water yesterday and didn't make it today, today is a mark against. And the reason why I say today is a mark against is because you have to know whether or not you're meeting your goals and your metrics. And then the only time it counts is when you get to the end. So now we know tomorrow we got to come in here and try to kind of hit it. Right? There was nothing wrong with the trades that we took. We took everything system trade wise. Our system has about a 70% hit rate when it's completely black and white. I can optimize it. Me personally, I can optimize it and make it about 80, 85%. Right? But we're not looking for optimization because that's not realistic. When you first start trading, you have to stick to the plan. If you're going to take a trade, this is just for future reference, so you'll know. If you're going to take a trade, then what you have to do, no matter what, right? If you're going to take a trade, you have to, and now when I say have to, follow the rules. This was a rule trade for us because everything was green. The only part about that is, let me talk about the optimization part. I could have taken this trade here. I could have. But I would have went against the rules because I said I wanted to see a market structure pullback. You can't optimize it and take it 1 bar pullbacks, but that's not what we were doing today. I might come in tomorrow and say, hey, we're going to take every trade on every pullback. But I didn't take this trade because it was not a market structure pullback. I took this trade because it was. And this trade here you got in, it didn't go in your favor. You could have gotten out at your immediate stop at 83. My absolute stop got hit, which was the 77 area. And then she hasn't done anything since. So we're done trading for today. This is how we do what we do. And this is about as real as it's going to get, everybody. To show you exactly what the market looks like, why it looks like it looks, and how much money we're making or not making. We're going to ramp up fairly soon, but we haven't got to our ramp up point. Our ramp up point is when we get to 161 times 5. 1, 2, 3, 4, 5. 161 times 5 is $805 net. We're at literally $569 or $570 and some change. Today's a not meet day. And it's a not meet day. You have to ask yourself why. Does anybody, hey, Ronald?
Sure.
And Quentin.
Yeah.
I need y'all to tell me why today was a not meet day without seeing a chart.
Consolidation.
Period. Period. When it's consolidating like that, you could opt not to trade at all and say, I'm not taking the setup no matter what. That's not what we did. But you can opt. You can opt to say, I'm not trading today. But here's the caveat to that. If you don't take trades, what happens is you get into a habit of being like, I'm trying to be selective about the trades you're taking. Does that make sense what I'm saying, fellas?
Yeah.
Yeah.
You don't want to be selective. You want, if it's a setup, you want to take the trade. Even if you scale back, right? You're like, today I'm not trading. I wish I had taken, I could have saved us about $35 honestly, had I just said take it with one contract, but one contract on the micro is, I mean, you don't even feel that, right? So then you get out of the habit of, you get into the habit of letting stuff run when you normally want to let it run. Does that make sense?
Yeah.
So
Yeah.
you have to, again, this is rule-based trading. This is how you reach goals. This is how you reach goals. We have to be able to know today, again, I want to say this up front. Today is a not meat day. Yesterday was a meat day. Well, you did great yesterday. Don't matter how great we did. It just, all it is did you meet? Did you not meet? Not tripping about why. We know the system works overall, but it doesn't work in consolidation. What we do is not a consolidate. We don't have a consolidate. We have a trend trading system. We don't have a consolidation system. I'm not teaching anybody a consolidation system. I'm teaching you a trend system and a trend within trend system. Ain't that something? Nothing. That is upsetting. You got to 90. Might not get anywhere past that though. So anyway, that's it, fellas. That's all I got. We'll do it again tomorrow. Any questions, comments, concerns?
Nah, not for me.
You're just part of what it is. Anything, Quentin?
No, I mean, I would only say, it was a consolidation day. It was a learning day. So we had to go back, we kind of did that. Why didn't we make it? So we make sure that we don't do that again, put that in our journal, say, hey, this is why we didn't make our day. And then also not, brush it off because we still got through the end of the month. As long, making sure we're up for the month. Because in the world of trading, what I've learned is you're gonna lose some, and you got to go ahead and set your mind to that. You're gonna lose some, but because if you don't set your mind to that, you will it'll mess with you psychologically, and then you won't be trading at all. So looking forward to the end of the month. I know we're gonna lose some, and I know why we didn't make it today. So we just don't make those same mistakes, and we keep our heads up.
Point blank, period. Right? This is again, guys, imagine it being like, if you're a guy, imagine it being like a football, basketball, baseball, hockey, whatever game, because most guys like some form of sport. Not every guy, but most guys like some form of sport. Think about it like if you played a team and every time you played them, you mollyhopped them. See, that's old country term right there, mollyhopping somebody. What that means is you beating their tail. Would you want to play them all the time? There ain't no fun in that. You want somebody to hit your back. You want somebody to hit your back, right? You don't want to just cakewalk over somebody. Well, let me tell you something. It creates a false sense of security. Because that's not the way the real world works.
Yeah, you had to say that slow.
Yeah, you gotta say that slow, right? That's not the way it works. I wish it was where you could just cakewalk through it and everything good for some people, but I don't care who you are. The world is not going to let you live and die 70 plus without seeing some things.
And now that I think about it, that's the perception that a lot of people have about trading and investing. They think they're going to come in, get in and get out, make their money, without putting in the work. And then, as soon as it doesn't work for them, they through.
Well, let me tell you something, right? I told y'all this earlier. If you quit every time there's a problem where you say, well, I'm done with this because it don't work for me, this, that, and the other. That's why, let me just be real about it. That's why most people aren't successful. That's why a lot of people, I ain't gonna say most, that's why a lot of people aren't successful. It's not because they can't be successful. They have to be able to go through that grind. and get to the other side. You will never be successful at anything until you go through a hardship and get over it.
Yep.
Just the way it is. You have to go through something in order for something to work. And if you come to me and say, Will, I got $100,000, I want to turn it into $1 million, and I don't want to ever see $99,000 in my account. I need to see, if I give you 100,000, I need to see 100,000 plus from now on. Take your money and run. I don't have anything to do with you.
Remember that individual that wanted to give me some money, and I told him no, and then he says, "Why? Why?" I said, "I'm not gonna be responsible for your money. What? You ought to make my money. I should be getting this much by this time." I said, "No." But that was a old school perspective, and so I declined it. I'm not gonna call no names, but I declined it,
No, I mean,
and that was why, based on what you just said.
yeah, you can't. I mean, this is a long haul thing for me. That's why, I mean, I'll be honest with y'all. So people know, you want me to train you, it costs 50 grand. Period. Because I'm going to teach you right. And you will know exactly what to do. This is, and watch this. People say, I sent the email out to a guy the other day. It's like, how much it costs? I was like, we don't have any openings right now anyway, right? Our team is full with 3 people, and then we got 2 more people that we're trying to train. So we don't have time. We can't give you the service that you need and or want. If I'm in here just trying to take fees from everybody, and all I'm trying to do is that's not what we're doing. We're trading for a living. I'm not trying to collect your fees. So $50,000, because I'm gonna show you how to be a millionaire doing this. For real. Like, this is not something we made up today to make it cute for YouTube, right? This plan been out here for a while. And I just now today or yesterday decided, okay, we're gonna start today. Right? Give me 1 second. I'm gonna show you what I'm talking about. Just give me 1 second window. This plan is based on 250 trading days. At the end of the 250 days, we're gonna see if we at this number right there. So somebody say, if it's a millionaire plan, why you got it to 1.7? You don't think I was saying I'm coming for that money? The government won't they cut. You make money like that, the government gonna say, hey, what's my fee? So let me show you what that looks like. We're intraday trading, right?
33 and the third.
No, I'm going to show. That's why I say this right here is teaching stuff. You don't get this from everybody. Let me find my calculator here. Oh, you said 33 and the third split?
The tax, 33.33.
No. Watch this. So I'm gonna show it to you. It's 1,700,000. Times 0.6. So that means $1,20,000, $1,020,000 is taxed at long-term capital gains, which is 0.15%. So it's $153,000, right? So then that's how much you have to pay on one part of it. The other part of it is on this amount here. I'm teaching you something here. You learning something today. Oh, I'm sorry. I didn't mean to do that. Whoa. Wait a minute. What's going on here? Okay, I'm tripping. I just want you to see it. Just give me a second here. So you're gonna pay $384,200 in taxes on $1.7 million. That leaves you $1,316,000.
Hmm.
So that's how that math works out.
Okay.
So you'd be a little bit over that, right? We're starting a little late. We're starting 20 days in the hole. So that's how we get to that number. So this is what we're trying to do every day. I am not going to sit up here and risk a bunch of money in no doggone consult. Is that thing it dropped, fellas? Hold on a second. Watch this. It sure did. It dropped. It sure did. It dropped. So, anywho, that being said, guys, I'm out of here. Y'all see where we at right now. You just gotta try to meet every day. Try to meet the goal every day. That being said, I'm out of here like Chuck.
Okay. Y'all be good.
All right, man. Have a good rest of your day.